Hello, hello, and welcome to March 15th. Alpha's Capri is at 100% ROI. There it is, 100% ROI. So that's Capri right there. We did cross the third ratio, close above third ratio a couple of days ago. We are now here at the at last bar low on 100 ROI. We are working against a ode of 46.19. Now let's find out. Let's see what the actual date was for the actual trade. The trade did occur on the 22nd of February. So where we are there at the 22nd of February. So a little notation here on our journal of notes. Uh, the entry date, the strategy, uptrend, the evaluators, which we determined that it was a good buy position. It was buy also from trading view, and then implied volatility was a 1. That means that the inflations were evenly fairly priced. The SOT is stochastics. We're 71%, 70 guys, we're 71% down here in the stochastics panel, right there, back here on the 22nd. And then we were at 57 on the RSI. Remember how stochastic strategy works. We get a uptrend in stochastics that is in turn supported with an uptrend from RSI. And then it is supported by a histogram in green. And that is the basics of the stochastic strategy of getting in. And then you look to get in at either the high of the candle or at the top of the body. The more conservative trader will get it at the top of the body, and the more conservative trader will go at the top of the body. The more active or aggressive trader will go at the top of the body, not the top of the candle. Oh, a lot of little rules and nuances. It takes time. It does. Believe me, it does. One call, one contract, one call, with expiration of August 55, date to expiration, with a delta 41 at the time we got in the trade. We estimated at 472. We got filled at 470. We saved 2 cents on that explanation. And the allocation is 9.9% of capital. That's 0.9% of this capital. This is the capital. This is the money left over in reserves. So all the money is deployed. We try to keep at least around plus or minus 5 to 10% here in capital, whatever it falls at the last trade. And you have money left over, and you have enough money left over, leave it there. That becomes a little buffer to if anything happens. Okay, moving on to completing the rest of this lesson on the trade journal. This is the anticipation of the option price we'd love to get, which is $50.91. We're not going to get there. But rocks become pebbles, pebbles become profit, profit does payback. So you can see at 100% ROI, we're at 472. If we can get the last bar low up here in a $500 range exit, then that will cut this down into the low 4,000s. Yes, that is true. You're looking at $4,619 owed. And that comes from my bad days of trading as a rogue trader. I've learned my lesson, and I'm now flying straight, very straight. We're looking for 158 for the stock target. This is the projector line. This is our projections, and it's supposed to be there. It takes 57 days to get there, and it's going to take 2 days to get to the third ROI or the third ratio, and it did. It got to the third ratio on time. That was pretty cool. But now that we reach ROI 100, which was today, we're now at last bar low for the exit to hold on to as much profit as possible. Remember the 5 rules of engagement. Rule number 1, protect capital. Rule number 2, take profit. Rule number 3, rule number 1, protect capital. Rule number 2, protect profit. Rule number 3, take profit. Rule number 4, exits do not retreat. Once you start moving your exits up, do not retreat. And rule number 5, rinse and repeat. So now that we had our indicators here for the lower low, we're just going to go ahead and remove those guys from the screen. So that way we have a little bit more clear on the screen. Also going to check to see if our moving averages has been fixed up. And why is it not clicking? Okay, I don't know. Oh, there it is. And it is simple. This one has to be removed. So we're going to remove this moving average because we're switched over to the exponential 10 EMA. So here we're going to go, EXPO, There it is. Double click it. Comes over here to the add studies. Go to the gear for a shift for the change. Change the 330 to a 10. And then OK it. Apply. OK. And now we have our, we're tracking with the EMA 10. EMA 10 is now one of the criteria to the stochastics. So those 4 conditions need to be set to look at taking the trade. In addition to, remember, you still have options criteria that you have to adhere to before you jump into the trade. Okay, with that said, let's go on now to our next highest point, and that is Walgreen. And Walgreen is here. We got in on this trade on 310. Let's verify that. We'll come to right click. We'll come down to view trades, and it's 311. It was triggered 311 at 6:40 in the morning. So we'll come over here to the journal, and we'll fix this up. And that is right there. So what happens is that I have now my entry date, and when I go in, and when we have the exit, I'll be able to calculate how many days we were in the trade, because I like to keep track of that. So there we are on that. IBT is our third one in position at 37%. And that is right here at, there it is. And let's check our stuff. We do have the 10 EMA. I can tell because the line is a little thinner than the 30. And right click, sure enough, it is okay. Our entry cost was right over here. Our entry cost, trade price cost is the entry cost. We got in at 553. We have the wrong data here. Let's go ahead and fix this. So 5.33, and the allocation was 10% for the trade. Now, what that 10% means is we're doing a 10% off the capital, and then we see if we have enough availability to buy into the trade. So it's 10% of capital is the risk management. Now, I know there's a lot of little rules like 2% of risk management. You take this, you subtract a number from the high number from the low number, and you get it's complicated. I mean, it was like, why are we so complicated? Just set it as a percentage to the capital, and we're good, and it works. I have a teacher who does that 10%. That's how he still does his difference in the 10%, but then he holds on to the 10% rule. Okay, that takes us to CBS at 35, and I can see that we're running against the clock, and I do want to touch on the penny trades. So this will be our last option checkout. That's going to be CVS. Let's go to CVS. There's CVS. I know that this trade got in on the 8th. I checked it earlier. Let's check it one more time. Come here to view trades, and sure enough, it's the 8th. Okay. Nice and steady. It's crossed this first ratio. We're looking for the second. Remember the exit rules. So let's go review that. We're risking 1 unit. If price comes down and touches this red line, we're out. And that means we lost 1. Our expectation is to cross and close above the third ratio and then look for a lower low, higher low, lower low, or the dipper lows. Dipper lows are very common by the dip. Well, we use the dip as a exit point in options trade in our arena here. Then we look for the second exit would be when price closes above the third ratio. That is the second exit, is the dipper low. The third exit is ROI 100. That's what happened to Capri. In Capri, we're at 100 ROI. That is the last bar low right there. Okay, going on, the rest of the field is doing pretty good. RTX, KR, and T. Now, the penny stocks are 22%, and our SNDL. So let's see something here. On this REI, we got in on the 8th of March already, and we're already at 22% for REI. And for Sundial, we got in at, Sundial got triggered on the 10th. That was about 5 days ago, 5 calendar days, and we're already at 13%. And we're running out of time. So I thank you very much for checking it out with Capri at 100% ROI. And thank you for stopping by and checking it out. Bye-bye.